Hey, really quick, I'm gonna have to go in a minute again for the babies, but TRX, I was waiting to get down a little bit before we entered. I didn't want to enter a trade just yet. It turns out my Ichima supports were holding even better than I anticipated. Right now, we're having a period of indicator convergence, that confluence of indicators I always talk about. I did that in a public video, Veda University video the other day. We're seeing the same thing. So we're getting a confluence of indicators here where I see my EMAs, my other Ichima dynamics with the leading span A of the cloud, similarly producing a strong support. We're forming a little bit of a wedge here, a triangle formation. It's symmetrical, so theoretically it could go either way. But I talked about in my last TRX video that we saw a little bit of bearish divergence. You can see the upside here in the PA, down on the RSI, so I expected a potential trend reversal and would have given us an ideal entry if we dropped down to this section here where I was hoping to enter. Now that I'm looking at it, given the amount of support that we've developed and the fact that we are in a potential breakout formation with this triangle, since it's a symmetrical triangle and it can go either way, you want to look at other potential indicators to match up with it to decide what you think the highest probability is, whether it would go up or down. And in this case, I don't see any reason to expect it to go down. We have a tremendous amount of support for my dynamics based on my Ichima model. RSI flattened out, as I talked about in the last stream where I talked about it. It's a very slight uptick, but it has reversed. So it certainly looks like a trend continuation pattern. It's almost as if I've talked before about how moving sideways isn't always a bad thing, because it gives you an opportunity for your indicators, like your oscillators, to reset. So if you have an oscillator, if you're looking at, say, RSI in this case, we were trending down. So we continued trending down even though the PA was moving sideways. We didn't actually have the price drop considerably to my target entry area. Instead, we've moved sideways, but we've also at the same time simultaneously seen a decrease in other indicators like RSI and the stochastic. I don't have Stoch up on the screen, but volume is also slowed down. So what I would expect if we are going to break out is to see an uptick in volume along with a potential breakout. Now, I wouldn't enter this trade if we had to use a substantial amount of risk, but given how close we are, I could probably use the EMAs and the top of the cloud, leading span A, as my 3 out of 4 dynamic Ichima supports. And using that, I can get in now. I'm only going to risk 1.85%. Well, I already entered, so I'm risking about 1.85%. That's not my exact stop, but it's relatively close. So I'm going to enter, if I were to enter right here, which I entered a minute ago at virtually the exact same price. So let's call that my entry. Say my initial stop loss is right there. It's about a 1.8% risk. So $1,000 trade, that's $18.50. It's a no-brainer. The potential upside makes it obviously worth it, especially since with an RR that high, the risk is so low that it's a no-brainer to at least take a chance on it. It's also a tether pairing, so if BTC happens to tank, we're not going to take a big hit. You'll get stopped right back out into your stablecoin of choice. You don't have to use a USDT pair. If you're using an alternative on another exchange, you might be able to trade directly out of USD. So take a look. If you guys like the setup, you can get into the trade with me. I think it's a pretty simple setup, same as what we discussed in the last video, except now I'm seeing the symmetrical triangle form and a potential breakout to the upside.